Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Thank you for joining our Friday Insights edition. Today is April 23rd of 2021, and today's topic, we're going to discuss taxes. If you watched the market yesterday, the stock market, very specifically on the Dow, NASDAQ, and the S&P 500, all of them took a huge hit intraday when President Biden released and proposed his tax initiative on a go-forward basis, his tax proposal. Now, this shouldn't be a secret because all through the last year as he's running for president, President Biden, or candidate Biden back then, was clear and transparent on his website of raising capital gains taxes. And taxes, actually all four tax rates in terms of the corporate income tax rate, the individual income tax rate, the capital gains and dividend income tax rate in terms of equalization to ordinary income, and finally step up in estate taxes, step up in cost basis. So essentially all of the Democratic candidates from Bernie Sanders to Elizabeth Warren and a few others that were out there a year ago were all discussing higher taxes, if you will. So this wasn't a surprise. What was a surprise, and as you saw markets get hit a good 2% off of their market highs intraday yesterday, was the level of capital gains tax from present 23, a little bit over 23% right now, to 43%, 43.4, all in at the highest taxable level, if you will. But the proposal was very clear. Capital gains will be proposed to be in line with ordinary income. And in some states, you add in the state tax, like California or a few other higher tax states, you are looking at a 50% tax. So that then adjusts the markets. The multiple expansion or the potential of future earnings have just been now dramatically ratcheted back down. That's why the market sold off. It basically said, wait a minute, markets are future pricing mechanisms of future corporate earnings. And as that basically gets dialed back because more taxes on a corporate side or even more tax on a capital gain side, it's going to slow down, one, business expansion, business investment, as well as individuals' ability to basically spend, because they're going to have less to spend, if you will, because they're going to be paying more in tax. Now, how is all of this a surprise? It shouldn't be, because if you look at the infrastructure bill that's proposed, or all of the CARES Act, or all of the previous stimulus, not even over the last 24 months, but let's go back, let's be honest, the last decade, if you will. There's a lot of just debt that's accumulating in the U.S. Treasury, and we keep issuing Treasury bonds, but at the same point in time, it's got to be paid back. How are we going to pay it back? Well, now we kind of get a better indication because it became a sobering reality in the middle of our trading day yesterday. Now, what's the solution, Robert? Obviously, there are a lot of headlines, and just about every news source is going to talk about it all weekend long. So the advice to clients right now is just sit back. Let's take it in. There's a lot of ground to cover in Washington in terms of negotiations from now to, let's say, Labor Day, if they get something passed by Labor Day. Now, again, last year I talked about this, last month I talked about this, and so I've been counseling our clients saying, listen, let's put our teams together, let's formulate, if I haven't been in touch with your CPA or your tax strategy team, please reach out to me and get me in contact with them, because the steps we make in 2021 and beyond will save you your assets and your family on a go-forward basis. Believe me, that's why we're hired all the time, because as the tax law gets into place, and this could be retroactive to the start of this year, but as the tax proposals go forward, they then become tax law. We start then go to work, and we start looking at if you're selling your business, when's the right time and what's the right structure, or if we're hitting a capital gain, how do we do it? Or charity then becomes a big component in your tax planning strategy on a go forward basis, because you're going to have two choices. Either you're going to write the check to the government and let Washington and everyone in Washington dictate how your dollars are spent, or write a check and get sort of a write-off, if you will, some form or another, and support your local community or your favorite charity. And those conversations will be more and more on a go-forward basis. But there's strategies, and as a team approach, we will solve the best way to handle both current tax law and future proposed tax law. But between now and then, let's not stress too much pay very close attention. But as we know, all of the bills last year and the year before, when they first started out to what they originally intended to be, or what the opening bid is on the negotiating strategy, to what it actually then becomes, oftentimes is very different. So let's not stress too much again, as I said before, but stay close to us here at Blanke, Schein Wealth Management. We'll guide you through this every step of the way as we're staying on top of this for you. And just know we're in your corner, and we're going to build the team and work with the team that you have to work through this year's changes and many years to come. So that's our update for today, and it's a evolving story. I'll be back with you on this many, many times with more updates, more concrete updates. But the take-home point here is, keep us close here at Blanke Schein Wealth Management with what you're doing, and we'll guide you through it every step of the way. You guys have a wonderful weekend, and thanks for watching. Take care.